Stop chasing growth in an uncertain economy. Yes, this is our theme for today. Stop chasing aggressive growth in an uncertain economy. And why we are saying that? We have uncertainty into the markets, we have inflation, and we have the weak demand. Now, while all these things are going through, many of the investors are having a question how we can navigate all these things, how we should structure our portfolio when the economy is weak. Now, here in this video, we will just guide our investors what are the main thumb rules you should be using in the current scenario while navigating the market. So in order to structurally go through it, it is very important and prerogative on our way that we should follow from the fundamental factors, that is from the macroeconomic factor. Now, if we analyze Indian economy as of now, we are having current account deficit under control, we are having inflation still within our limits, and we are having a robust banking system, and at the end our corporate balance sheet is also strong. So what does these four elements tell us? These four elements tell us that our economy is strong, our macroeconomic framework is solid. That means the bedrock of Indian investment landscape is solid. So therefore, it is very prudent and very good and fertile ground for an investor to invest and make money. However, now the challenge comes up, if everything is so hunky and dory, why we are not seeing the returns into the market? This is because there has been weak demand. The individuals as well as institutions and businesses are not spending, they are not consuming, because unless and until the one entity into the market does not spend the money, the other entity will not be able to earn the money. That means if you and me are there into the market, I will pay you for your services and you will pay X, Y, and Z for the services you will take. People are not paying that much into the market. Because there is subdued demand, the economy is slow and sluggish. So therefore, for this, government does take various policy measures. We will also see how it comes during this sway the market. But if you see what is happening currently, is everybody is apprehensive and none of the entities are actually making a spending. So that is the reason why there is a slowdown in the economy. That is the one element. Now, then what does the strategy should be for an individual retail investors? Now, point is that earlier it used to be a momentum based strategy. We could see a couple of stocks being bullish on their MACD and technical analysis, and then we were trying to ride the wave. बहाव के साथ गंगा के बहती गंगा के साथ हाथ धोना, that is what we are doing. But now currently, since the whole tapestry of the market has changed, therefore the strategy should be, you should be following the market leaders or the large cap stocks, because they are having strong fundamentals, proven resilience, they have the big balance sheet to stand and wither it. What you should need to avoid is your speculative bets. Speculative bet means if you see that okay, X stock has come down by around 30%, but it might still be at multiples of its valuations, which might be still very above the benchmark, and it might still have next 10 to 15 or 20% to crack. So therefore, don't ever put the speculative bets at this current market scenario as we see. Then it comes ki okay, we could focus on the large cap stocks or those with having the proven resilience, or even some very good mid cap stocks with a strong balance sheet and the growth in their perspective and at a very good valuations. That is okay. But then what the government is doing now, government has two ways to prop up the economy: fiscal stimulus and the monetary stimulus. What does the fiscal means? Fiscal means finance. Fiscal means they are putting into the money into the market, or they are doing the capex investments. But the government is actually following the fiscal prudence. They do not want to spend too much on it. They want to constrain their spending and expect private sector to put in the money. So therefore, that is gone. Why? Because if they spend too much, then not only there is a risk of the deficit that we are going to have to the GDP, but also there's a risk of higher inflation, because when a pumping of money happens into the market, that enables more money chasing few goods, which leads to the inflation. If inflation goes up, again it's the same story. So we have to contain that. In order to better contain it, the much better option that the government is having with them is a monetary policy. Monetary policy means repo rate reduction. We have seen the repo rate has been reduced in the recent past, but however that effect could not be enjoyed by us as an investors. Reason being, the US had made a bomb remark about that tariffs being imposed on India and the rest of the world, and that actually didn't let the Indian markets absorb. Plus, Indian market was expecting the rate cut to happen, so it was too less to later sort of the story. So therefore, What does this bring on to the table now? This brings on to the very critical element that we need to be patient about it. We can't, because only patience is the thing that will enable you to multiply your money. If you're not patient enough, then I believe you are not cut out for it, because the type of the market in which you were investing 8 months down the line, 8 months before, or now is totally different what it will be 8 months down the line. We anticipate it will still take 6 to 8 months before we could see some signs happening, unless until some really good quarterly results start coming maybe in the second quarter of the financial year. So that is the thing. So therefore, stay patient, prioritize your risk adjusted returns, do not speculate, and go for the large cap stocks which are at the value buy if you are a conservative investor and does not know much about the stock markets. So markets will always have a cycle, they will always give opportunities to invest, and if you already have money and you have been sitting on the sidelines, this is the time when you should be investing your money into the market. If you have not invested in the market when the tides are lower, you cannot enjoy when there's a wave at your back to take you to the peaks. So that is Rajadar signing off. Have a great day.